So welcome to the TraderQuant channel, and today we are not going to backtest anything. Today I am going to show you guys. I was doing some updates in the BigTrades Quant Analyzer tool, and the development of I was also working on a different tool and developing, and the development on that tool is almost complete. It's completed, so I think I need to show you guys also along with today's in today's meeting. So today we will not do any kind of backtesting. I will show you the updates that I had done in the BigTrades Quant Analyzer and the other tools on which I was working on. Okay, so today what I need you guys to participate with me. So whenever I will ask any question, everyone need to turn their mic on and answer me by speaking or anything. Or if you are not like okay with turning your mic on, you can simply um, write it. But I need you guys to turn the mic on and participate with me, and it would could be very easy for everyone. And so. Let's move a chart a little bit back and start something so that before this move, we will the what is the purpose of all of these order flow tools? Just to catch the move, enter in the move before it happens. So we need something from the tool to tell us that this move is about to happen. So we need to enter. So let's draw a volume profile. We can draw a full day volume profile. We can draw 4 hour volume profile. We can draw a previous session volume profile, previous New York session volume profile, because this was an NY session, and market is currently ranging in between that, so we are good to go. We can draw a previous session volume profile. Let's mark it from here to here. Okay, sorry. So where market is currently ranging, okay, sorry. So where market is currently ranging? Market is currently ranging near to the point of control. Okay, near to the point of control. So we don't know that market will go buy from here. Okay, but we can mark this area, okay, as a potential area, and we can set our first perception about this area, that maybe market will come to this point. Where is that triangle? Market will come to this point and then go to buy, go to upside. Okay, this is our first perception. If market break this area, we can look for the sell. Okay, so let's wait for the market. When it will reach, when it will come to this area, we will turn our tool on. And as the purpose of the tool is to watch the market behavior on your point of interest. Okay, doesn't matter if you use ICT, SMC, any strategy, any concept, you have to turn it on your auto block, on your fair value gap, or anything, and look for and see that if it is provide you any confirmation from there to enter. So let's play the chart and bring the market on your point of interest. Okay. I think I have drawn the square little bit below. This was the point where it is taking the rejections. So maybe because I have not prepared everything, I just simply start the call and move the chart. So I don't know that if the market has came near to it or not. Because if we draw the simply point of control, this is the line, and if we mark the complete cluster, this is the cluster, complete cluster. So market is taking rejections in bit from the clusters. So Let's move the chart because we are doing the raw back testing and everything. We don't prepare for anything because we don't need to do that stuff that everyone do. So market tab into our point of interest. What we need to do, we need to turn the tool on. So what it was previously telling, I think this cluster is too much. This area is good enough because we have to take the reaction from the point of interest, not above. If market is giving reaction from here, that's not a good sign because if market has to give a strong reaction, it would be either from the point of interest or near to the point of interest, something. So let's play the fucking chart. Oh, sorry, I was wrong. So that's what happen when you don't prepare the things. So what mainly YouTubers do, they uh simply watch the market where it has given the reaction and play it from there. I just simply open the chart and try to show you guys the update what I have done. Today it was not a backtesting session. So let's suppose market is in our point of interest and let's expand it and let me change the settings a little bit. Good enough. Good enough. Okay. So what was happening before in this tool? Now you can see if you see the images in the group, uh, all the size of the bubbles size were same. So no, there should be no difference between the size of the bubbles. No doubt it was representing the big trades on the accurate and correct price levels, but there should be a difference in size. What I had tested in the back testing, let me draw something that you have to tell me. I'm going to ask you guys what these bubble represents. These represents the imbalance. So what is the imbalance and how the imbalance forms? Tell me if you guys have any um clue what is the imbalance and how the imbalance forms in any easy wording. Do you guys have any clue about it? So I can't hear you. Maybe you guys. So no one is turning the mic on and participating. What do you think? What is the imbalance, Okila? So you have turned your mic on. Don't want to take the chance. Simply say I don't know. If you don't know, I will explain. Do you know what is the imbalance? So never mind. I will explain. So the what is imbalance? Imbalance is the difference. Uh, so if you are going to speak, anyone?
Yes, sir.
Sure, sure. Go ahead.
If I can say
Yeah.
it is a place where maybe the buy orders exceeded the sell orders.
Yes.
There was no balance in price.
Yes. Yes. You are right. So imbalance is like price stays in a balanced state. It is price is like a seesaw, and currently it is in a balanced state. And there is a one side on the seesaw, the participant is buyers, and other side is sellers. So whoever's exceed in the quantity, okay, if buyers are more heavier than the sellers on a certain price level, by it makes an imbalance. Okay, it makes an imbalance between on that price level. Okay, so that's a simple concept about the imbalance, and that's what these bubbles represents. Okay, so uh, there are two type of imbalances. What are these what two types? So either the imbalance can form if on a certain price level there are two buyers. Oh, sorry. On a certain price level, if there are two buyers and zero sellers, so imbalance will form. And what is the imbalance? What is the percentage of imbalance? How many? If we at a certain price level, if we develop a percentage, it should be 100% imbalance. It represents that there are no buyers and there are no sellers and the few buyers at certain price level and the imbalance will be 100%. You guys are not reading what's happening behind this bubble. You are just seeing that where the bubble forms, there is an imbalance at this point. But you have to understand that either this imbalance is a strong imbalance, either this imbalance is the imbalance that on which you can rely. You can't rely on this imbalance. Why? Because at this price level, at at this price level, there are no buyers. Okay, there are no sellers. There are no sellers, and there are two buyers. And just because there are no sellers and a few buyers, it makes the imbalance to 100%. And if you see the 100% imbalance at some point, you get an anticipation that maybe this price level is very strong price level for buying or selling. But actually, it is not. Why? Because to protect a certain price level, you need uh, the excessive amount of the opposite participants to protect that price level. If after some time, um, sorry, so if after some time, price will come down at this price level. Do you think buyers will, these two buyers, only two buyers will protect this price level? No, because just because there are no sellers, that's why it becomes 100% imbalance. If there are 200 buyers at this price level, okay, if there are 200 buyers at this price level, then you can think that there are so many buyers at this price level. No, if sellers are reaching this price level, buyers can protect this price level. Okay, so imbalance can there is if there is a 100% imbalance at some price level, you can't expect it to be a strong imbalance. It could be a strong imbalance if there are excessive amount of buyers and sellers. So at the same price level and it then the imbalance has formed. If there are few if they are the participants are in few numbers, so you can't expect it to be a strong imbalance. Okay, and there is another type of imbalance, like if there are 100 sorry, if there are 150, if there are 150 buyers at a certain price level, and so if there are 150 sellers at a certain price level and 250 buyers at certain price level, so the imbalance would form, bullish imbalance will form. And what should be the percentage of imbalance? Maybe 40% or 30%. So just for the sake of example, this imbalance is 40%, and this imbalance is 100%. What do you think? Which imbalance is strong? Oh, sorry. Sorry, we need to shuffle these two words.
The buyers are strong.
So the imbalance where so at this price level, there are only two buyers and zero sellers, and the difference between them is two, and the percentage of the imbalance will be 100% because the imbalance percentage will be 100% now, just because there are no sellers, and you will not consider this imbalance as a strong imbalance. You will consider this imbalance as a strong imbalance if there are 200 buyers, if there are 100 buyers, if there are like more in quantity, which you can think that there are now they can protect this price level. And in this scenario, There were once 50 sellers and 250 buyers, and imbalance formed 40%. So this 40% imbalance is the strongest area where price, if sellers come again, they can be rejected at this price level. Buyer can protect this price level, and you can get a good buying trade. Okay. So our tool show before this, our tool shows all kind of imbalances at all the price levels, but the size of the bubbles were not different, and we can't differentiate between the strong imbalance and the weak imbalance. I have changed the logic that I have told you, that how the strong imbalance works and how the weak imbalance works. I have changed the logic of the indicator, and now it will create the size of the bubble based on the imbalance, based on the imbalance percentage. Like if it is a strong imbalance formed, how strong imbalance formed? Strong imbalance formed by the larger number of participants from on both sides. Doesn't matter if it is 10% imbalance. Okay. If it is 10% imbalance formed by 300 buyers, 200 sellers, and the imbalance could be 10%, we are good to go with that kind of imbalance. They will protect that price level. Okay, we can rely on that. If there are 10 buyers and one seller at certain price level, we can't rely on that kind of imbalance. We can't think that if market again came to that area, imbalance area, buyers will protect that, because buyers are lesser in quantity who are going to protect that price level. So I have coded that functionality. I have taught you guys this functionality before I will show you, because you need to understand the different the logic behind the bubbles. So if the size of the bubble is bigger, it means the imbalance could be found by the larger number of participants. You can see the smaller bubble size, this kind of bubble size, the smallest bubble size, and this bigger bubble sizes. Okay. So you can see, you can differentiate between them. You have learned the logic behind them, why these big bubbles are forming, and you can now tell that why the size of bubble is small, why the bubble size of bubble is even smaller than this, and why the size of this bubble is bigger. Okay, so understand?
Yes,
So
understand.
okay, so
Got it.
when the price reached at this level, when price reached at this level, what happened? Strong imbalance found by the sellers at this point. How the imbalance form? That if the at this price level, if sellers exceed in quantity from buyers, then this kind of imbalance forms. Okay. So if this kind sellers were exceeded from the buyers at this price level, what should be the normal behavior of the candle? The behavior should be price could have break this price level and went down. Okay. Yes. But what happened? These kind of all these
Oh,
imbalances are formed in the running candle, not after the candle close. Okay. When price was at this
yeah,
point in this imbalance form, then candle move, this imbalance form, this candle form, when this close, this imbalance. So all of these candle forms in the running candle. If we play this chart, the well, it don't moves the candle like tick by tick. It just open close marks high low and then close. In the real time candle when moves on all the price levels, the imbalances formed at real time. Okay, when a candle certain reaches a certain price level. So what happens? Sellers exceeded in the quantity from the buyers at this price level. But when the candle closes, candle failed to close below this price level and or breaking this price level. Candle closed like this. What it means? It means sellers tried to push the price down. Okay, and sellers put their 100% effort more than the buyers at this price level where we were expecting market to go by. Okay, but then what happened? Sellers were absorbed at this level. Okay, seller has pushed done this much of bigger effort at this point to break the price, break this price level down, take the price down. But what happened? Sellers were absorbed at this price level by the buyers, and buyers pushed the final price of the auction at this point, from this point to this point. Okay, so what it means? It means sellers are absorbed at this price level. Okay, And then if sellers are absorbed, we don't need to wait for the second confirmation that buyers have to give a follow through. No. If in this tool, what is the absorption? That if the buyers or sellers, like if this is a buying area and sellers try to break this area and sellers failed to break that area, and a selling imbalance formed in the low of this sell candle. How selling imbalance formed? Because once prices, sellers take the prices at this point and try to break that price level. How you can say that they tried their best to break this price level? By watching this imbalance. They tried their best to break. Look at the effort at these price levels and look at the effort at this price level. Okay, they tried to break this price level, but they were absorbed and buyers pushed back the prices up. Okay, at this point. So you knew that sellers are absorbed at this price level. If you trade SMC, ICT, supply demand, auction market theory, any strategy, you knew at your point of interest now sellers are absorbed. You are good to go for buy. Okay, so that's the change that I had done. You can see at the in this at this area what happened in this buying scenario. Selling candle opened from here, and they push the price down. Okay, this was a sell candle, and when this closed, the next candle opened from here and they pushed the price down. What happened? A lot of selling happened at this point, but why they failed to break this area, or why they failed to close their final prices of the candle below this area? Because they were absorbed at this point and buyers were enough strong to take the prices from this area to this area, the final auction of the candle. And what happened in result? Price move up. Okay. What happened at this area? Candle opened here. Okay. When candle went here, you can see a strong imbalance, a big bubble. Can you see this bubble? A big bubble at this point. Strong imbalance happening at this point. But when the final closing of the candle happened, buyers failed to close above this imbalance area where they put a lot of effort. You can see this imbalance as an effort of the buyers. Okay, so if they put this much of effort at this area, there should be the result should be same. If there if this area is not like a dangerous area. But what happened? They failed to close their final prices of the candle above this imbalance, above this price level. In result, what happened? Price is pushed down. Okay, so this is the thing that I had updated. You can see the imbalance by the size, and you can make your anticipate. You can read the market, read the market based on that. And what else? What is the other indicator on which I was working? Let me show you that. Where the fuck? So let's close them. Let's close this one, and we will spend our last few minutes of the meeting explaining this. So we will, the name of the tool is Quantitative CVD Analyzer. Okay. So today we will read the price together. Okay. So what this tool do? This tool shows you the open interest of the market, of the bigger participants, of the institutions. Okay. This tool tells you that in this candle, the institutions have put their done their buying or selling. So what happens in the market, that they shows you they creates a market structure differently. They traps you, they trap people, and entering or adding their positions on a different side of the market. you do your analysis daily, you try to enter in a trade, but what happens at that time, market exactly moves or from reverses and hit your stop loss. You never understand that in this price level, what are the positions of the institutions. Okay, so what this tool tells you, so what happened at this candle forms, and our tool tells that in this sell candle they have shown this as a selling candle, but what happened at this sell candle, institutions are buying at this sell candle. Okay, behind this sell candle institutions have bought the gold. Okay, so if the institutions have bought the gold, so let me show you another thing. They were showing you that the price is moving down. Okay, they were showing you, they were showing the retailers that the price is moving down, that they were trying the retailers to enter in the sell trend or sell direction. Okay, but what they actually were doing, as price were moving down, they were adding their positions on a bullish direction, on a buying side. Okay, so before giving a move, they will induce or trap everyone. They will try to everyone to leave to not to enter in the right move. So you knew that where the open interest was of the institutions, their open interest was to take the prices up, but they need to push the prices down in order to induce people to enter into the sell direction. And when you will see, let me remove this. When you see on your point of interest that they created a sell candle, and when you see by our tool that their actual positions, they are actually buying. Okay, so let's play the chart and enjoy the game. So if they were buying, what will happen, price will move up. So what happened in the next candle, price move up. In this candle what they have done, they have done selling in this candle. So what should have happened in the next candle or next few candles? Tell me. If the institutions were selling, putting their positions in the sell direction, what should have happened? Open your mic and tell me where the market will go, buying or buy or sell. No one? No one wants to
It will
participate?
go, it will go buying.
No, tell me. We will read every candle now. Okay? We knew their overall direction, but that market will go by. We are interested in a bullish direction. But if they created this sell candle, okay, if they created this sell candle to show, they show this sell candle to the retailers, okay, and their positions were actually in the buying direction where the price went in the next candle buy. Okay, but when this they show this buy candle, okay, where their actual positions were, where they put their order on the sell side. So where the market will go next now? Tell me. Tell me, market will go buy or sell?
I think ideally you want to trade with the institutions.
No.
So if they
We
are
will, we
selling,
will,
sorry.
yeah, yes, we will read candle by candle now. Okay, so where the price will, if they have done selling and shown you guys that market is buying, where the market will go? Market will go in the sell direction. Same. Price will always follow what institutions are doing. Okay, price will always follow. Price will not follow what auction market theory trader is doing, what ICT trader is doing, what supply demand trader is doing. No, price will always follow what institutions is doing. Institutions are selling at this point, but they have shown a buying candle at this point. What will happen? Let's play the chart. Price went down. In this down candle, they are also interested in selling. price went down. Okay, why they are doing this? Because there is a fair value gap at this point. There is a fair value gap at this point. Market is in a sell direction. They try to induce people. They try to add people in a sell direction before giving a move to the buy side. Okay, so let's play the chart and see. In this sell candle, what will happen? They have put their position on a buying side. They have put their buying positions, opened their buying positions. Okay, so where the price should go next? If they open their position on the buying side, where the price will go next? Tell me.
It will
Up.
revisit the balance, the imbalance.
Sorry, I can't hear you. What you said?
Price, price will go and revisit the unbalance.
Yes, price will go buy. Let's see where the price will go. Price will go buy because they were buying at this point. At this candle, they were buying. Price will go buy, and this buying candle they had also put their buying orders. You can see where the price will go next. Buy. They are also putting
Back to
their.
the
Sorry. So let's play it.
price will go down and visit the unbalance, fair value gap, fair value gap.
Yes, they look at here. They are again reaching the fair value gap. If some traders had entered in the sell direction at this point, maybe they are if some traders are left to enter were missed this move, they will enter now at this point. Okay, when price will reaching this fair value gap, and they are trying to give a little bit of reaction at this point in order to trap them to enter in a sell direction because institutions where institutions wants to go, institutions wants to go buy where what they are showing to the people that market price is going down. Okay, so what overall scenario, overall we are interested in a buying direction, but the retail traders, we don't call retail traders and ICT traders, SMC traders, supply and demand, access market theory, all of these traders are not retail traders. Retail traders are traders that trade blindly. They which in 2026 they only rely on the candlestick and these kind of stuff. So let's play the chart. They are giving some kind of reactions at this point to induce people to go sell. Okay, now look at the reaction. They were trying to sell, add the people in the sell direction. How they play with the mentality of you guys. When you buy, market go sell. When you sell, market go buy. Everyone has faced these kind of situations. Now they are again showing their aggression on the buying side, adding buying positions. What happened at this point? They created a price as a buying candle. What institutions has does, they again put a little bit of selling orders in the market in order to induce the people. Where the market will go? Again, they are putting their selling orders in the market in order to induce the people. Okay, market is going buy. Okay, market is going. Price is they are showing the price that price is going buy, but actually they are adding the positions on the sell side. So where the institution place orders, market follows their orders. So they give this kind of reaction at this point, a sell candle, in order to again give a chance to enter in a sell trade, and then they give a strong reaction at this point, break this area. Okay, now they are adding buying positions and candles, market is following them. Price is going up. Price is going up following the institution's orders. What is happening at this point? They are showing where the price taps. Let me show you. Price tap into this fair value gap. What happened? They are showing that price is taking rejection in from this fair value gap, and they created a sell candle. Definitely, people will enter on the sell side at this point. Why they will enter? market is selling, creating lower lows, this move, and now giving reaction from the extreme fair value gap. They will enter in the sell direction after this sell candle. But why we will not enter in the sell direction? Because their open interest is rising. They are taking the prices high. Their positions are on the bullish side. We will never take the sell from here. Okay. So let's play the chart. So as they were buying at this price, when they created this sell candle, they were actually buying. You can see this candle, this green candle. They take the price up on the next candle. Again, they created a sell candle, rejection from that fair value gap. Again, they were buying at this point. So if they are buying, price will never go sell. Now they are putting their little bit of orders in order to induce. So let's continue the session. So here we are. So if institutions were buying at this point, you can see the institutions were buying at this point, but they were showing that price is going sell. Do you enter in a sell direction from this point? Tell me, whatever strategy you use. Tell me, yes or no. Do you enter in a sell direction? You will not enter in a sell direction. Okay. And now at this point, they have done a little bit of selling in order to induce the people more to enter in a sell direction because, but we will not and never enter in a sell direction. We knew that institutions are taking the price up. Okay. So we will be interested in the buy direction or no direction for no trade. Okay. We will trade with the direction of institutions, not with the direction of what our strategy shows or whatever the POI is. Okay. So let's play the chart. They were doing a little bit of selling at this point, take the price down to induce the people before giving a good move. Okay. Now what happened at this point? They have created a sell candle at this point. They have created sell candle at this point, but what they have done? They have done strong buying at this point. Okay. So if they have done buying, where the price will go next? Tell me. Open your mic and tell me where the price will go.
It will drive back up.
Up.
Up. Let's play the chart. Where it went up? It went up. How do you knew that price will went up? Because you are watching the actual footprints of the institutions, actual order executions of the institutions, which direction they are interested, at which candle they were doing what, and price went up ultimately. They entered again the buying positions in this candle. Price went up, price is forming now. They are not trapping the people. And then what happened? Price went up. So if you maybe you have seen at some times that when price will give this much of buying candle, at sometimes price retraces and price retraces like this and maybe don't not give the again strong buy reaction. But if you see that the institutions have done the same amount of orders are buying at this point, which you can see by this candle, you can follow this move along. You don't need to think about like this, no, we have missed the move. You knew if these institutions have done this much of buying at this point, price will go strongly bullish in the future. Next. Okay. So let's play the chart. Where price went? If you have missed this candle, you'd have caught, you can catch this candle. If you knew that, if you don't miss this candle, if you think like that, that no, price has moved too much up, we need a little bit to retrace at 50% or here, you may have missed this move. Okay. But when you see this kind of institutional buying happened at this candle buying will not affect this candle. This kind of this buying will affect the next candle or the candles in the future. Okay. So in future, where the price went? Price went buy. Okay, in the buy direction. So let's play the chart. Again, they have done strong buying but you have not see you have not but did not give any kind of that much of reaction at this point. Why they did not give that? But because they want to trap the people. They want to trap the people who have bought at this point. Again, buying, following the order executions of institutions, price went up. Now they are following every order, price is following correctly. Now, what happened at this point? Let me show you clearly, close. So the amount of buying that have done at this point, you can see that the selling is not, if this selling is more than this much of buying, this candle, selling should have to break this break the low of this candle, this minimum this candle. Yes, but what happened in the price? Candle strongly break the low of this bullish candle. But in actual, the amount of selling orders that are executed at this price level are not even more than the buying orders that are executed in this candle. So you will never enter in a sell direction at this point because you knew this big candle is a trap candle. Okay, let's play the chart. What happens? Again, they fail to close below the prices at this point. So we are not selling at this point. We are just reading the candles. Okay. Again, what is happening now? They have closed below this price level, and you can see the difference between this candle, and this candle. This candle has strong selling happening at this point, and you can expect selling in future or maybe a little bit of retrace selling happened in the future. But what is the difference between that between this selling and this much of selling orders? You can see the body and the how bigger is this candle, and you can see how small is this candle. Okay, I am not using the difficult terms. I can use the actual terms that are happening behind the candle. I am using the term candle just because you guys can understand easily. So this candle is smaller than this candle. It means the amount of selling orders execution that happened in this candle are reduced now as price is moving down. Okay, let's play the chart. What happened at this point? They have done buying more than the selling happened in these two candles. How we can say that? You can see the how big is that candle, how strong is that candle, and how you can see these two candles. But in the price has not given that much of reaction. Why they are? Because they are trapping the people. Price will give the reaction in future on the buy direction, surely. But they need to trap the people in order to give a good move. Now again they have done strong buying. The amount of selling that happened from this point till this point, all of the orders that are executed to put the price down were these orders, and the amount of buying that happened in these two candles are more than the orders executed, the selling orders executed from these. Okay, but reaction is not same. Price will definitely give the reaction in future, but they have to trap the people. They have to induce the people that either to go in a buy direction or not. But when you see this much of institutional order execution, or what CVD shows you, CVD shows you the aggressive buying of the institutions, aggressive buying and aggressive selling. So, okay, what is aggressive buying? When you trade on your brokerage firm, you press the buy sell button. It means you are aggressively buying or selling. Then you put the buy limit, sell limit at some point. Then you are now passive seller or passive buyer. Okay, so the let's play the chart. They are aggressively buying. Okay, People will see this small candle, they will get double-minded. They will think that price is at the fair value gap. Maybe price will now move down. But if you see this much of aggressive buying from these institutions, you will oh, simply close your eyes and put a buy order at any point of these candles. Play the chart. They have entered in a sell. They put some of the selling orders at this point in order to trap the people that price is giving reaction from the fair value gap. Okay, but what actually happening? Look at the difference between this. So if I mark the high and low of this candle, and if I mark the high and low of this candle, so this is the amount of orders aggressively buying, institutional buying happening in this candle, and this is the amount of institutional selling happening at this candle. So you can see clearly selling is less than the buying happening at the previous candle. But what you see in the chart, what retailers will see in the chart, that this candle has closed below this candle low, and price and no institutions and price has given a good reaction at this point. Now we can go for sell. But if you see the institutions buying are less than this candle, than the previous candle, institutional selling were institution has aggressively sold lesser than previous candles. Okay, you will never enter in the sell direction. It is a trap move. They are trying to fake ICT traders, but they are trying to trap ICT traders. Let's play the chart. What's happening now? They are giving a strong buying reaction at this point. But again, they put their selling orders at this point in order maybe they were future they are again trying to trap the people who were left to sell at this point. They were trying giving them a second chance to enter in the selling direction at this point. So let's play the chart. You will see the size reduced of the buy candle. Maybe they will consider it a golden opportunity and enter at this point. But you can see a strong buying has taken place in this candle. Okay, so if they have in strongly buying at this price will definitely move up in future. You will not enter in a sell direction. Let's play the chart. Price went up, they again strongly buy at this point. Let's play the chart. They have given a selling reaction at this point because they are giving a second chance in order for people to go sell from this order block. Okay, where from this order block. But do you sell at this point? At this order block? You will not sell at this order block because they are trying to trap you guys. When you will play the chart, they putting their little bit of sell orders in order to push the price down. Okay. So what is the difference between both of these? Look at the bodies here. The body that happened at this, the body that formed at this. So the final closing of the orders is of the body is very less. The rest of these are absorbed by the institutions, but because they want to trap you guys. Okay, either or you will not. Anyone who is using this tool, he will not enter in a sell direction because market is clearly they are taking clearly prices to the buy side. You will not enter any of the order block, any of the fair value gap. Okay, so let's play the chart. What happened at this point? They have strongly bought the market, but they have shown that prices are still going down. All the people who left entering at this point, they will enter at this point. Put the stop loss above this area. Play the chart. Again, they aggressively create a buy candle. Their heartbeats now will get fast. That price is taking the stop loss, but they have done a little bit of selling, or they have closed their selling orders at this point. You can see the body of this sell candle is smaller than the body of these sell candles. So it can consider as the closing of their previously buy selling orders that were open to take the price down and induce the buyers or induce the sellers. So again, you can see that they are trying, they are showing a little bit of selling at this point, trying to but they are trying to trap the sellers. Now they are buying at this point in this sell candle. What happened? Look at the size of this candle, the doji candle. So it is all, you will never understand what is happening after the doji candle. It is like a morning star, shooting star, these kind of patterns. They all based on the assumptions. Like there is a 50-50% chance either market will buy or market will sell. But if you see this tool, if you see by the third eye, and you can see that how much strong aggressive buying happening at this point in this candle. But what they have shown you guys, they have shown you guys that market is going to sell. Market is making a doji at this point. Okay, market is, they created a sell candle. What will happen if institutions are buying? Tell me. Open the mic and tell me what will, if institutions have aggressively bought at this point, what will happen in the future?
Price will go up.
Price will definitely go up. So let's see. Again, they have bought more aggressively than the previous buying, and they, after creating a doji, they are again creating a rejection candle of selling candle, which you can take as a sign to again enter in the sell direction if you missed entering in this order block. Okay, but you knew that they are aggressively buying. They are trying to trap you guys. When you will enter sell direction, they will, market will move buy. So that let's play the chart, and so look at the reaction. Where the price is now going. Price is going to hit their stop loss. But if you were reading the price like this, if you were watching the institutions, what the institutions are doing at each candle, at each price level, you will never hold your trade. If you were enter at this point, you will never hold your trade. You will close your trade and enter in a buying direction at this point. You will enter a bullish trade at this point. You will enter, okay? Look at this point. Look at the the amount of manipulation they are doing at this point. What is manipulation? The candle they have shown is a strong sell candle and has closed the previous candle opening. Okay, at this point. But in the actually they have put a little bit of small selling orders in order to induce the people again from the order block. But they are even like uh, 30 or 30% of the previously buying orders. Okay, so if these sell orders are smaller than these buying orders that were executed, market will never go down. Okay, this a little bit of little amount of selling orders are to induce the people to sell again in the sell direction, in order to give their, before market to move their in their actual direction. Again, this candle has closed below the previous candle. No strong confirmation to go sell from the order block. But what is happening in the actual? Not even close to the previous this candle has closed below this candle's low. But in actually institutions are reducing their, closing their selling orders. Look at the body of this candle. Look at the body of this candle. They are reducing their buying orders, selling orders, and closing their selling positions that were taking the price down. Now they are good to go from on the buy side. Maybe we can get a reaction. Look at the amount of reaction at this point. They, when they have closed their selling orders, again you get a strong reaction to the buy side. They have bought aggressively. Now the people who will enter from here, their heartbeat will went to the skyrocket at this point. That now strikes stop loss is going to hit. Again, they are giving you a small rejection at this point to in order to maintain your heartbeat and enter in a position again from this direction. Look at the amount of manipulation that is happening, and you can avoid all of the manipulation. You can read what's happening behind the candle, and you can stay confidently in your position and avoid the fake moves. Okay, so they have put this is even 10% of the previous candle, this. Okay, and you can definitely say that price will never go sell. Just because they are prices at the order block and they are trying to trap you guys. Let's play it. They are now bought more than these selling orders. Okay, so price will went up in future. Okay, what's happening at this point? Look at the doji. When you will see this doji formed on the order block, you will maybe you think that in buying candle the rejection is you are getting rejection from the top, you are getting rejection in the sell candles, price is closing sell candles, you are getting strong sell candles, maybe market is giving you third chance to go in a sell direction. So the people who were left from these areas, they will enter in a sell direction from now. The market has given a chance to them now. But what's happening behind the candle? They have strongly buying, aggressively buying the market. So, if they are aggressively buying the market, will you enter in a sell direction from the selling order block? Tell me, yes or no.
No.
You will never enter in the sell direction. So, if they are buying, where the market will go? Market will go next buying. Okay, let's play the chart. What is happening? They created again a rejection candle at this point. But what they are doing at this point? Tell me what they are doing at this point. When they created a sell candle, what actually happening behind the market? Tell me. No one wants to take a chance.
They are still buying.
Yeah, they are still buying. They are trapping. Okay. So you will never enter in a sell trade at this point. So if we play the chart, let's see. When you will enter a sell trade at this point, you will put your stop loss above this week. They will simply hit your stop loss. And now again buying at this point. When you will play. Now they are aggressively going up, adding orders. Play the chart. Done a little bit of selling orders in order to again maybe trap the turtle wick soup traders. Okay, maybe to take the price a little bit of down. So in situ market has to, if you think that they don't, anyone the algorithms that they have created and they can't see your patterns, then maybe you are in a very wrong state. So all of your education is free on the YouTube. ICT, SMC, supply, demand, auction market, everything is freely available on the YouTube. So you think that you can surpass them just by watching the YouTube or taking any mentorship videos, and you can surpass them? Never. You will never surpass them. They have updated and upgraded algorithms that avoid, if even 10 traders follow the same strategy, the algorithms detect that strategy. Even a small prop firm algorithm detect your strategy. So if you are putting your orders in with the ICT, SMC, supply demand or action market theory concepts in the market, and these concepts are maybe 10 15 years old, you have are already available on the YouTube. So their algorithms has already ready for your ICT, SMC, supply demand, every kind of traders. So they need to trap you guys in order to give your the move in the right direction. Okay, you can create your own strategy. You can enter, if this order block is the order block where you were expecting the market to go sell, but you can see the interest of institutions is to take the prices up. You can use this order block and take the prices and buy at this point. You will never sell at this point. You have to upgrade your strategy, update your strategy in order as per your own trading behavior and as per your own back testing. Don't follow the strategy that has already been created and used by the thousands of traders. Okay, take any leading tool with you, back test and forward test with that, and create your own strategy. Create the strategy where most of the people get trapped, and you have to enter from there. Okay, using that tool, master the tool, create a strategy, master the tool with that strategy, and then just trade silently. Okay, so let's play the chart. Price is moving up. Price have to move up. They are showing a little bit of selling. Now we can see they are taking the price down. Again buying. What is happening at this point? If somebody can see this kind of strong sell candle, inverse fair value gap, market took this highs. This may be the Asian highs, inverse fair value gap, the TJR strategy. They will enter in a sell direction at this point. But why you will not enter in a sell direction? Look at this point. What is happening? They are taking the price up. Okay.
Yeah, they're pushing
All
it
of these
up.
sell candles they are creating, they are buying in this area. So let's play the chart. Again, they are creating sell candles, equal highs, but they are buying behind them. Will you sell from this point? Again, they are creating the sell candles, but they are where they are going. They are continuously buying because they take the price to the discounted level where no retailers can buy. They create the pattern of the candles which no retailer can resist, and no retailer can think that this pattern would be wrong. Because if you trade like any PJR, ICT, anyone, if you see at this point market sweep this high, create a turtle body soup, market created a inverse fair value gap, you will definitely sell at this point by seeing this candle. Yes or no? You will definitely sell at this point. Okay, but if you see what is happening behind the candle, where institutions, in which direction institutions is interested to put their orders, you will never enter in the sell direction. You will blindly buy at this point. Okay, let's play the chart. Again, they are aggressively buying. They are again, and what they are showing to you guys, that they are taking the price down. Okay, so what is happening? Look at the slope. Look at the slope here. The actual chart and the chart
The
that they are
market
showing
is
you
going
guys.
up.
The chart that they are
The
showing you guys and the actual chart.
market is getting higher and higher.
Now they are buying. Now they are showing their interest on the buying side. You can enter from here in the buy. You can enter from here in the buy. Or if you have bought at this point, you will never fear this sell move. You knew that what is happening. You will hold your position confidently. Your heartbeat will never get fast when market will come against you, because you knew what is happening. Market definitely follow this order. Market will not follow this strategy. Market will follow institutional order flow. Let's play the chart. Again, they are showing selling. Again, what they are doing? Buying. You will again sell from this point. They are creating a down slope. But what they actually they are, this is what they are showing you guys, and this is what they are doing. If they show exact activity what they are doing, then even a simple breakout trader will be a successful trader in the market. But they have created the algorithms that detected all of these strategies, and they have coded these strategies to avoid all of traders to catch the right move and trap them, and make there is a term that in the highs there are stop loss, there are no stop losses. The only aim of them is to avoid most of the traders before giving a right move, before going the market in the right direction. Okay, if you they don't get rich by your stop loss, but if they show this chart to everyone, to every retail trader, anyone could be successful, then no prop firm business would run successfully. Prop firm business needed to run successfully to in order to get people in loss, in order to take people most of people in loss, and then get few people in profit. So they sell their data to the institution. They sell all of their data, all of the strategies, everything, every pattern they detect on their prop firm, broker, or anything. They sell that data. Okay, their data is coded in the algorithms in order to avoid your trading strategies. At some point, your strategies works, but most of the times they will not work. There will be 50% accuracy all of the time. No, there will be no 100% accuracy. But if you see actually what they are doing, then you will not fear this sell move. You will not enter in a sell move. You will not enter use this strategy like market take the high, give a total body soup, make an inverse fair value gap, getting rejection, taking the price down, you will not enter in the sell direction. You will enter in the buy direction at the top because you knew what's happening. Let's play the chart. Again, they are taking the price down. Look at the level of manipulation that they play. Okay, look at the what I call this fucker. So what they are doing with the retail traders. Look, look here. Trapped everyone. Trapped everyone. Induced everyone to enter in a sell direction. Look at where they took the price and where they actually what they actually doing. The amount of manipulation that they have done. Now starting showing their interest in the buying side. Look at now. Again, a little bit of selling rejections. Again, taking the price down. In this sell candle, they are again entering their buying positions. They are again entering their all of these selling orders that you can see are the orders that are taking the price down. They are closing those orders. Okay, they are closing those orders, and now they are close when they close their orders. They enter to add their new orders on a discounted price. Okay, so they have bought in this sell candle. They have bought in this sell candle. So if they are buying, where the price will go? Look at the aggressive buying that happened. Look at what happened behind this candle. See, this sell candle, behind this sell candle, they are buying. They are inducing every retail trader to enter in the sell direction. But where they actually go, where they will go low, everyone's stop loss will hit because everyone's stop loss may be at this high or this high. This high stop loss will never be safe because their actual direction was in a bullish direction. So let's play the chart and see. So ultimately, market went up. Okay, ultimately, market went up, but they have induced everyone to go in a sell direction after they give you clean buying move. Before giving the clean buy move, they induce you guys to go in the sell direction. Okay, let's move to another chart and see if they are doing a manipulation on only the 5 minutes or all the charts. So refresh the chart. Look at this point. Let me remove all these drawings. What is happening at this point? They have done a little bit of selling. They have done a little bit of selling at this point. Okay, in order to take the prices down. But what they are doing in all of these candles? What is happening in this sell candle? In this sell candle. What is happening in this sell candle? What is happening in this sell candle? What is happening in this sell candle? Okay.
Buyers are going high.
They are strongly buying, they are aggressively buying, they are taking the price up, but they are showing you their price is going down. They are trying to trap you guys. But when you will read the institutional order flow, when you will read what they are doing behind every candle, you will blindly enter in a sell direction, in a sell candle on a buying direction. If you see they are doing they are buying. If you see they are buying in this sell candle, you will definitely buy in this sell candle. You will not induce will not become the uninformed. You will not be the part of the uninformed speculative money who will enter just on the base of someone told that these are the. I don't rely on the auction market theory everything. I rely on the institutional order flow. Every trader who is a successful trader, who is world champion, who is at any point, he uses the order flow. He needs something. I don't recommend or tell anyone that you use this software or use that software. Anything that you can thing that which will be easy to use for you and matches your strategy. You can avoid the fake moves and get the right direction of the market. Use that order flow tool. Either it could be anyone else tool, either it will be my tool, either it will be the tool that you find easy, that you find which you find easy to read the market. Use the tool, whatever strategy you use the tool with that. And because it is 2026, and don't simply rely on what they show you, what they create on the chart. This structure is never will never be the actual structure that is happening behind the market. If this was the actual structure that is happening behind the market, everyone would be a successful trader. Every strategy would be a profitable strategy, or there will be maybe only one strategy in the market which will everyone will be using. Why they created different strategies, why the need of the creation of different strategies came into existence, because they need, because no strategy was 100% successful. But if you create your own strategy based on the structure that you are following in real time, what really actually doing in the institutions, you can simply create a simplest strategy based on this institutional data, and avoid all of those strategies in the market, and simpler strategy, and you could become a profitable trader. There is no need to mark the thousand of lines on your chart. You just need something which is reliable, which provides you the actual information, actual order flow data, what is happening behind the candle, and backtest it and create a simple strategy based on that. Or you can enhance your current strategy, and you can be a good profitable trader, because you knew if the institutions are buying and you put a buy order, you knew why you put the buy order, because institutions are in a buying direction. Okay, so that's it for today. That's what I was going to show you guys. And if you guys have any questions, you are free feel you can feel free to ask any questions. If you combine like I combine this order flow tool with the volume profile, my strategy, and with the actual with that strategy with the big trades, I catch only the move which are the profitable moves. I avoid the fake moves. I also did not back tested much is because I have completed its development recently. So this, but you don't need to worry about this. It is pretty much back tested, and because I have not shared much money trades based on this tool. So you maybe you will think of like this, like you have if you have this tool, you have to share the trades based on that. But I have developed this the development on this tool is completed recently, so I will share the trades in future in the group. So sorry I interrupted you guys. You have 2 minutes. You can ask the questions. In after 2 minutes, our meeting will end.
Okay, so what do you do? When is the indicator coming on?
Sorry, your there is so much noise. Uh,
When is the indicator coming on?
I I can't hear you. You can write the question. There is noise behind.
Will it be available for purchase?
Yes,
It's a
it
very
will be.
incredible tool. I've never seen such a thing.
Yes, yes. Basically, I was working on the website. So this is the Traders Quant website, our website. So the main functionalities, which are the functionalities to accept the international payments, on which we were working from last few weeks, is completed. We just need to enhance the visibility or the structure, which is you can see on this strategy or on this website. Uh, so our developers are working on this. So we will launch this tool very soon, and you guys can enjoy this and use these tools. And my main aim is not to scam anyone. Okay, I am not a YouTuber. I am just a good programmer. I have 5 years of experience in programming, and I am ex-programmer. I am now full-time trader. I have learned every strategy and everything that is available in the market. So I knew how to use footprint. I knew how to use price ladder, the DOM, the heat map, and from ICT, SMC to each and everything. I have learned every strategy, and then I decided to code something which is useful for the people, and this tool will be available soon. You guys don't have to wait much now. So I will post the tool. I will tell you guys soon that when the website work is complete, so we will launch both of the tools, and then you guys can freely use them and buy them.